or something that you can put in your house. Craft fairs are no longer something you have to go to. You can find any craft you want on Facebook if you wanted to. So to me, those are hobbies. Things that you're kind of entered into for a profit, but at the same time, the people that do those things, they're not making a lot of money. All right? You just can't. I mean, you're not in it for a fortune. So it's personal pleasure at the result of an activity. Their example is raising horses or fishing boat charter. Now, to me, a fishing boat charter is more raising money, but they said whatever. So the activity is not engaged for profit, then hobby loss rules apply, meaning your expenses are deductible to the extent of your income. So when I think of things like a craft fair, those individuals, even though they're making money, they can take all their expenses to the extent of their profit and basically can show they're not making any money. I always wonder when I go to these places who's actually claiming their income and who's not. And usually you can tell because the ones that are claiming their income are charging sales tax. And the ones that aren't charging sales tax probably aren't claiming their income.
So when you look at websites like Etsy, and so some of the people on there, it's a lot like the craft fair, but some of the people they're trying to make that their main source of income. When it's your main source of income, that's no longer considered.
It is not. No. But how do you know if it's your main source of income?
Well, see, that's the question. What if your husband has a really, really good job? You don't need to have a job. You're just bored.
You don't know that. And see, and nobody knows that. But I can tell you, anything you do online is going to be a lot more subject to anybody that's selling something at Lindbergh's gym. Okay? So that's one thing from that standpoint. So if the activity is entered in for profit, you can deduct the expenses for AGI even in excess of income from the activity. All right? If it's entered into profit. Why? Because it's considered a business. A business, you can deduct all your expenses. So therefore, if you are doing it for profit as a craft or whatever other things they do online now, you can show you had all these expenses and you lost money. If you're at the craft fair and you're the guy who does the glass fish, which I can't figure out who buys, they're literally people who blow glass into the shape of fishes. And where do you put? Every year they're there, and I'm like, how do they even buy the box to be at the craft fair? If they're in that for profit, that has to be a hobby. But if they're in it for profit, they could show their losses. All right, they can show their losses because any at-risk and passive losses apply. Passive losses mean that you cannot deduct beyond the extent of your gain, and we're going to talk about that. Often, it's very difficult to determine, as Katie just said. Is it for profit or is it a hobby? All right, so there's different factors for determining whether or not. So if an activity shows a profit for 3 out of 5 years, 2 out of 7 if it's horses, so horses keep coming up, the activity is presumed to be a trade or business rather than a hobby. So for most of us, 3 out of 5 years. The key behind all this, though, is they have to actually show it on their tax return. Again, I keep coming back to the craft fairs, so people have to declare it. I go walking around to these things all the time going, who do I make the check out to? I'm always like, people with the business card, they're claiming it. People that say make it out to Robin Barrett, probably not. The activity is presumed to be a trade or business rather than a hobby. Otherwise, now, it says rebuttable presumption shifts to the burden of proof to the IRS. Otherwise, the taxpayer has the burden of proof again. So you can say, hey, no, it's not, but normally it's still with the taxpayer. Okay? So how does this work? So hobby losses. The first year, 2011, they had an income. Yes, it's a hobby. Next year, they had a loss. Next year, they had a gain. Next year, they had a loss. Next year, they had a gain. So they kind of just kept flipping back and forth. But in 2015, it's no longer a hobby. Because even though they kept flipping back and forth, 3 out of 5 years, they now had an income. So in that 5th year, they now are no longer a hobby.
These are measured like a 500, not thousands.
That's just $500. Yep.
Even just that, 3 out of the 5 years.
$900 is now. Yep. Now. Yeah, but then you do, because then in 2016 it's back to a hobby. And in 2017 it's back to, so it goes back and forth.
So such, the way this is set up, because of how they keep alternating, it means that every year they have a loss, it's a hobby, and every year they have a profit.
Well, in this business
Yeah,
that they're
so
showing
they go
you,
back and forth.
but it might not be the case. It could be something where it's hobby, 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 income, you know, and now it's a business. Because maybe it did start off as a hobby. And, you know, some crafts and some, exactly, thank you, woodworking, leather, a lot of these things, they do start off and then they just grow. They get better at what they're doing. You hate to say it as a hobby, but even as an EA, if you start as an EA and you could just be, I just like doing a few people's taxes. And it is a hobby because I'm not really doing it a lot. And by the time I buy the software, which if you buy good software, not TurboTax, it's hundreds of dollars to get a good one so you can file for free. And then by the time you use your house, and if you do have a room and you have paper and you have ink and you get your income back, you're spending $500 or $600 without using your house. So by the time you recoup that money, you could be income loss, income loss, income loss. But next thing you know, you have 25 people you're doing taxes for. So now it's no longer a hobby. So things can go a lot of different ways in different types of businesses. If it's deemed to be a hobby, you can deduct expenses only to the income for the activity. You cannot deduct any type of hobby losses. Right? So there are benefits
For that year?
for that year. So once the next year it's no longer a hobby, then you can go and deduct it. You can deduct the loss. So there's an advantage to something being a job, right? Not a hobby. Yeah. If an activity is a hobby, expenses are deductible from AGI only. So now that's a bigger disadvantage, right? People are going to not like hobbies as much as they used to because now not as many people are going to have itemized deductions. So they're not going to like that as well, right? Because they're going to be subject to, miscellaneous deductions are going to be subject to 2%. And then other things like those, itemized deductions for mortgage and stuff, if you're going to do a home mortgage deduction, that's going to be even smaller. Now, the order and hobby expenses and deductions, first, you have those that are deductible for the whole house. Then you have those that are not adjusted basis. And then you have things like depreciation. So let me show you what I mean. Your income for your hobby was $15,500. Hobbies can bring in a lot of money. All right. Then you have your interest. That's for the whole house and taxes. So that's going to come into effect for the hobby first. Divide it out, obviously. Then you have your vet bills and your feed. Obviously, we're talking horses again. And then we have our depreciation. Now, it's capped at $500, the depreciation on probably the barn or the house, because you can only go to the $15,500. So we made $15,500 on our horses that we raised, right? But we still, as a hobby, because we didn't. So did we have any income we declared? No. As a hobby. So just because it's a hobby does not mean it doesn't make money. Yes?
So when you talk about deducting the mortgage interest and the property taxes, do you mean the whole
No.
thing or
Just the part that
portion?
relates to the horses.
The barn.
That's just the part, probably the barn, right, that relates to them.
And
And that's just the portion that does right there.
and is that capped at 10,000 like itemized is?
Wow, you're talking about next year, honey. Yes, and that's why I'm saying that's all going to be changing from that standpoint. And that's why I don't think it's going to all be capped and then it's going to be distributed based on that. Yeah. The vet bills, no. The feed bills, no. The depreciation, no.
Just the interest and taxes.
Mhm.
Like the interest and taxes.
Not for this, no. For this was going to, see that also, now here, if that's just related to the horses, then that could possibly not be capped because it's not going under itemized deductions. This is going directly to the hobby. Hobby losses go on the first page.
So if you had, like a.
This is not an itemized deduction. This is first page. That's advantage. Remember, this is an advantage of a hobby loss. Of hobbies. Hobbies go on the front page. It's a 4 AGI. So this is not capped at
So if
10,000.
you have a really big barn, like the taxes for is over 10,000.
Oh,
you can
yeah.
still declare the whole thing.
Yep.
Okay.
Yep. You can pay taxes on a garage. Like if you live in the city and your garage is separate from your house, you can pay taxes on that garage. And not just the city, but I just know specifically in the city of St. Louis, I have friends that have a garage that it's part, like with a condo, they have a separate garage,
Yeah.
and they pay taxes on that garage.
The interest, is that mortgage interest?
That is mortgage interest.
What if there's no mortgage?
Then you wouldn't have mortgage interest. Then you don't get that.
You can't do.
Nope. You'd still have taxes, but you would not have any interest. So then you'd lose that $6,000 or whatever it was. So then you'd have possibly a $6,000 unless you, but your depreciation, yeah.
Appreciation, yeah. Okay.
Yeah. All right, so that brings us to hobby. So that kind of wraps up the hobby losses. So we got some time to go back in. There was a couple things that I can definitely,
Could I ask about political
yep.
contributions?
yep, that was one thing I wanted to try to touch on. And then there was one question in here. I don't think anybody in here asked it. I think I got an email from Daniel about it, but go ahead. Go ahead. You go ahead and ask it in case I don't flip to it, and if I do, we can just go ahead.
Political contributions, you can't.
No, you cannot. Nope, that's one of the things it talks about. So,
That's the only, but if you do other charitable.
charitable contributions you can. Political contributions you cannot. And people think you can. So you need to, like, people will give you every year. I mean, I can't tell you how long I've done my brother's taxes. He's never done his own. And he's 42, so however long that's been, right? Every year he puts them in there if he gives any. I'm like, dude, how many years are you going to give me that? I said, it doesn't even go in here. Why do you? I just put in everything and let you figure it out. I'm like, okay. So one of the things I wanted to mention, so this is just, this just talks about a lot of the different forms. All these forms, not farm, because we don't get into farm income in here, but all these forms are out on the Blackboard. Lost my train of thought. I keep looking, and when I see new 2018s, I put them out there. But outside of like the 1040 and a couple other, my guess is there are going to be some seriously last-minute forms coming out. But they just kind of talk about, here's our less AGI deductions that we already talked about. It's kind of a partial list, but it talks about how they're there. And then there's your Schedule A. And then there's other forms that go into that we will talk about when we get to the Schedule A. We already talked about methods of accounting with the accrual and the cash and the hybrid. The one thing that's mentioned in here that I got a question asked about 2 chapters ago, and I made the comment to Daniel, and he goes, oh, I guess I must have missed that. And I'm like, did they ask a question about that in 2 chapters ago and really not state it into this chapter? And it was about the fact that you have to, if you prepay for something, like right now, okay, so we're in September, and you pay for 24 months of something, you can recognize the 3 months of it now, October, November, December, but then in 2019, you have to recognize the rest of it. And that's basically what this 12-month rule says. And it actually specifically states it right here, but now I'm like, did it not state that back 2 chapters ago when that question was? Okay. It was a question about, no, there was a question, because Daniel emailed me.
At the time we asked you about it, be like, we don't understand what's going on, and that's.
Yeah, Daniel asked me about it, and I explained to him, and he's in the online section, and I explained it to him. He goes, well, that makes sense, thank you. He never said, I can't find that in the book, but he just said, okay, that makes a lot of sense. I must have missed that, is what he said. It's very polite. And so I was like, and so then I'm going over this, and I'm like, it says it right there. I wonder if it didn't. So there it is in the accrual. And I went back, and I kind of glanced in the book. I knew it wasn't in our slides, but basically for both cash and accrual, you can only go right now and then the next full tax year, and it has to be recognized. So you either recognize the 3 months that are happening right now or whatever is in this year, and then the rest has to be recognized. It doesn't matter if it goes for another 9 months in that next year, 2020, it all has to go in that next year. It doesn't like to go any further.
So, there's some bigger corporations, and they're just big, so they have money, and they can sign bigger contracts.
Doesn't matter.
So if it's a 3
This year, next year.
contract, you still have to recognize it all.
And that next year. You can do it this year and next year. All right. We'll go past.
It's a contract
Yep.
where you go through the next fiscal year. It's gonna last more than 12 months, way more than 12 months, and they only get paid when they complete.
We discussed this, though, installments, you recognize.
Installments are different than that. Okay, so what that was just saying is you were paid for all of it now. You recognize 3 months now and the rest in the next 12 months, even though it continues to go.
Okay.
If you're being paid in installments, you can recognize it in installments because you haven't gotten the money. You haven't received all the money up
So
front.
you received all that money?
All the money was up front. You can't sit there and wait, even though you got all the cash now, and recognize it for the next couple of years. You have to say, here's 3 months, all right, prepaid rent, but then the next year you have to recognize all of
Do you
it.
have the option to recognize, excuse me, I'm sorry. Do you have the option to recognize it all immediately?
You probably do, but most aren't going to want to. I actually don't know the answer to that. Most are going to recognize only the first 3 because you've only earned the first 3. And so with accrual, you're only going to recognize what you've earned. And it's going to be an unearned revenue at the time because it's a liability, correct? And expenses, you're only going to recognize it because you've only earned. Cash is a little different. Cash, you can recognize it all up front. Whoops. Okay, we'll go through that. That's okay. So if courts can disallow different things based on, for a variety of reasons, notice how it says that, if they view something to be disallowed based on that you violated some policy, you cannot deduct that. You cannot deduct fines. I think we already mentioned that already. You cannot deduct fines. You cannot, like, if you violate any specific, I think that's the next slide. If you violate any type of fees, public kickbacks, any type of briberies, you cannot deduct those. There was I was going to read it, but we had a lot of questions. It was a ethics, or equity and ethics, and it talked about, there were 2 of them actually. One of them was a marijuana example on page 615, and it talked about that you are allowed to have a marijuana card, and you're allowed to have what's called a designated primary caregiver. And so one individual was the signed caregiver for a whole bunch of people. All right? And he grew the marijuana, and he was their caregiver. And he had $200,000 in revenue, $120,000 in cost of goods sold, and $50,000 in other expenses. So he went to say that he reported only $30,000 in net income. And is that ethically okay that he's this caregiver for all these people? Was that really what they meant by you having a designated marijuana card and you have a designated caregiver? Am I supposed to be a caregiver for 40 people? Is that really what? Exactly. He is is he using it as a business when he didn't want to call it, business or whatever? The other one talked about kickbacks, which reminded me. That's why I went back to it. And it talked about, which I didn't realize this had happened, so that's kind of why I thought it was interesting. It talked about Smith & Wesson. And Smith & Wesson tried to get in the international market with guns. And they went over to Pakistan, India, and some other foreign countries, and they were trying to get in the international market. And the way that they saw that they could get into this was that they provided some gifts to some government officials. Well, in different countries, gifts are okay, all right, but the Foreign Corruption Act, it's not okay, even though it's allowed in some countries. So what ended up happening, it turned out to be a very costly mistake because Smith & Wesson had only profits of $100,000 from this scheme before it was uncovered. And in 2014, it agreed to pay the Securities and Exchange Commission fines of more than $2 million. So they made 100, they paid $2 million, and that $2 million was not deductible. So, and people try to deduct those fees.
Well, these petroleum.
Oh yeah.
They were able to deduct their fines from the.
BP, right. Not all of their fines, but some of their fines. Okay? It depends on what the fines were for. And that, because depending, now, there were legal fees? Yes, they were. And why were they able to deduct their legal fees? Are they in the business where legal fees are reasonable and normal? Yes.
The fines should not be.
The fines should not, but I'd be curious to see which fines they were able to deduct. I'd be curious to find that out. A couple other quick things. Legal expenses, that's what we were just talking about. Those can be deductible if they're considered ordinary and normal. Illegal businesses, some of the illegal businesses are able. So usual expenses of operating a legal business are deductible. Okay? Because if you're operating a legal business but you're not filing a tax return, then you're going to have back taxes. So, just something to think about if you decide to do that.
So you want to have a lawyer on
The
retainer
deduct,
keeping
you need to
track
have a
of
lawyer on retainer for your illegal business. Deductions for fines or bribes or kickbacks are not deductible. Trafficking of controlled substances, only the cost of goods are allowed. Okay? So you can deduct the cost of goods sold if you're going to traffic controlled substances.
Well, good news, heroin's worth a lot of money.
Exactly. Lobbying, we just talked there. You can deduct some, well, and before 2008, you could deduct some exceptions for local lobbying, but that was before 2018, so I think that's gone now. So in general, there is no deduction for payment for political purposes. There are some small, de minimis, notice what limited to $2,000 in-house expenses. Those are not political contributions. Those are expenses that are you can sometimes deduct for lobbying if that is your type job. Expenses, not donations.
So if you're somebody who lobbies for your company, you can.
Have expenses for lobbying, but even that is limited in companies. So Dr. Payne did not get to deduct his expenses. I think there was excessive contribution. There you'll see a little bit about that, and I think you might have a homework problem on that, where you can excessive, basically it's limited to $1 million annually. All right? This includes, after this year, it includes commissions as well as the salary, but people are grandfathered in. It's the CEO and the top 3 employees, highly compensated employees. So it is limited to their $1 million annually. It does not include stock options and until 2018 commissions. It's just their salary. So what does that mean? It means that's all they can deduct. Doesn't mean they can't pay them. They can pay them whatever they want. It just means on their salary for deductions, they cannot go higher than $1 million.
That's the
CF.
CFO.
Oh, well, it's the CEO and the top 3 other. It doesn't have to be the CFO. Could be the.
Yeah, the CEO, CFO, and the three.
Oh, okay.
So
So that's 5 people.
5 people. 5 people. Okay.
So what was that investigate? Yeah, once-
There. So investigating, if you're going to look at another business, and take a look at this because we won't have time to go through it, you can look into another business, but it depends on what you're doing. If you're in that business and you're looking at another opportunity, you can deduct those costs. If you're not in that business and you choose to look into it and you decide not to go in it, you cannot deduct those costs. But if you're not in that business and you choose to do it, you can capitalize those costs as an expense going into it. So the only way you're out that money is if you go in, if you look into it and you decide not to do it, then you just eat the costs.
So if you look into it, but you don't do it, then you're.
And if you look into a brand new business adventure and you don't do it,
But if you're in that
field, if you're in a dentist field and you look into going into a new partnership, then you can deduct those expenses. So that's what this is talking about. And those couple slides talk about whether they're required or not. And was there anything? Oh, and then we got to hobby losses and stuff. So we kind of got through it. I know those other smaller areas were quicker, but we got through the big 2 ones by going to them first and coming backwards. So hopefully we spent enough time on the bigger areas. The investigative loss, I'm not even sure if I ask a question on that, but if I do, basically you go into it, you get to deduct it. If you don't go into it, then you eat it, unless you're already in it. Okay. Now your practice problem is out there. It's due by Friday. If you came in late, remember?
Already told her.
Yeah, dividends are either to answer it and get it right, it's $2,500. To answer it and get it really right, it's $500, but it will be marked wrong. So pick your answer.
And we all agreed that we wanted it to be marked right and sent.